If you had invested $100 in Bitcoin back in October of 2009, you would have today over $100 million. However, if you had invested that same $100 in November of 2013, you would have watched that $100 fall to just $14 by January of 2015. Many people sold their Bitcoin back then. The question I need you to answer in your mind right now is, if you are one of those who discovered Bitcoin in November of 2013, what would you have done by January 2015? Would you have sold? Would you have held on to it? Or perhaps would you not even have been in the game in the first place? Would you have seen it and just ignored it? Many of the banks and governments want you to think that Bitcoin is a fad, a dangerous thing, a pyramid scheme, a bubble that will burst, a conduit for criminals, and so on. And many people think that Bitcoin is fake money and that national currencies are the real money. In fact, if you follow the media, you will notice that Bitcoin was declared dead more than 190 times since December 2010, and that is only in the English-speaking media. Yet it is still here and it is still growing strong. Well, I'm here to demonstrate to you that the banks and governments are wrong. Banks and governments have their own reasons for wanting you to think that Bitcoin is unsafe and unreal, but it's not true. For you see, Bitcoin and cryptocurrencies represent a new era of increased freedom and prosperity for the masses, for you and I, and for everyone else who takes part. This is the first time in recorded history that the general population has had the means and the technology to own the monetary system themselves. In fact, while freaking out in March of 2016, President Obama called Bitcoin a Swiss bank in everyone's wallet. Today, Bitcoin puts the power and control of your finances in your private hands. Absolutely. Whereas in the past, the monetary system was always owned by the rulers and the banks. Up until today, sovereignty created currency. But the tide is finally turning. It is no longer sovereignty that creates currency. It is now currency that is creating sovereignty. Sovereignty of the individual. It's making individuals like you and I, rich and wealthy, independent of bank and government control. In other words, sovereign beings. Are you getting this so far? Are you understanding where part of the bigger picture of Bitcoin comes in from, right? Now, additionally, many people think that national currencies are backed by gold. They're secured by gold. And these people think that all the money in the world, or most of it, exists as paper notes and coins. Again, they are wrong. That's just a myth. The truth is, only about 2 to 4% of national currencies is actually physical paper notes and coins. In physical forms, only 2 to 4% of the money in the world exists physically. The rest exists as digital records on bank accounts and so on, in databases, on computers. To put it in another way, for every $100 or its equivalent in any currency, only about $2 to $4 exists in physical form, as printed paper notes or coins, while the remaining $96 to $98 exists as numbers written on databases. The only reason this system does not collapse is that we all believe in it. And as you will see later when we speak of secret number 2, the gold backing of currencies ended in the 1970s, more than 40 years ago. Today, the money in your bank account is literally just digital legal fiction that we all believe in. Legal fiction. Sounds crazy and almost unbelievable, right? Well, you hang in there and I'll show you actual proof of all this. In this webinar, you will understand the number one factual reason why Bitcoin is real money, more real than the dollar, the shilling, the euro, or any other fiat currency. You will also see the number one factual reason why it will grow in value and popularity, possibly creating the biggest transfer of wealth in history beyond your wildest imaginations. You are going to get in on a secret that very few people know today. They'll know it later, but today very few people know it. Does that sound good to you? Now, if you've ever thought that the governments and the banks actually want you to fail at being truly free and truly wealthy, you're probably right. They don't benefit from you succeeding at true and absolute independence and prosperity. Of course, they don't wish that you completely fail. That's crazy. But they do need your servitude. They need you to serve them. That's how they stay alive. That's how they keep their profits and authority and power and so on. So they therefore want to keep you in debt and in their need and under their watchful control. The difference with Bitcoin is that it doesn't have a political agenda. It doesn't have human greed and lust for power driving its decisions. And it doesn't have any owner or master. It is purely mathematical. It is simply a pure decentralized tool doing its job as a means of exchange, unit of account, and store of value. Nothing more, nothing less. It's not trying to place you in debt to anything. It's not trying to control and restrict your behavior. It's not trying to govern you. It's not trying to enrich the elites at the expense of the masses, and so on. So, in this way, it is a new money revolution. You see, we had the agricultural revolution in the past, and then we had the industrial revolution, then the information revolution or the information age, and now we are witnessing the beginning of the new money revolution. It will change everything, and it's only just beginning. Does this make sense so far? Good. So that's what you and I are here for. But what I mean is that a human being ought not to be enslaved by anything, should not be enslaved by anything, and especially not enslaved by the enforced need to survive, by forcefully having to earn fiat currencies or else die or become homeless. In other words, it's like society puts a gun to our head and tells us unless you work 40, 50, 60 hours a week, and that's what you do most of your time, you're going to be homeless or broke or whatever. That's what I mean. That is slavery. Although there's no actual ball and chain to the foot, it's still a form of slavery. That's what I mean. We are the only species that literally have to pay cash to live on Earth. The only species. There's 30 million species on Earth, and we are the only one that has to do that. That's weird, right? And it's artificial. It doesn't have to be that way. A human being can live a very decent life doing work that they love, even if it's hard work, but work that they love, work that they choose to do, work that fills them with passion and satisfaction and a sense of meaning and contribution. And the human can take short breaks or long breaks whenever their natural rhythms call for breaks and do it all in balance with all the other interests and passions of that human being, without being punished or denied by the system. What I'm trying to say is that you should be able to do all the things that you're interested in, not only the thing that your boss told you have to do, Because a human being is, after all, a multidimensional being with many interests, many passions, many talents. A human is not just an industrial slave with a singular interest, okay? I nevertheless realized that the system itself was part of the problem. It wasn't just about me failing to succeed. The system itself that I lived under had a significant role to play in my results. That makes sense, right? I knew that I had to first learn what abundance and wealth truly were, besides that crap that they teach us in school. Ask yourself this question, my friend. Ask yourself, what really is money? Not what I've been told money is. What really is it? You see, I've been told that money comes from work, so I should go and work and get some money because money comes from work. Are you sure? Ask yourself, what really is money? What really is wealth? What is abundance? What is currency? How exactly does the monetary system work? How else could it work? Why is it the way it is and not another way? And what if I wanted to exit that system and have my own monetary system or use a different one that worked better? What role does consciousness play in all this? What about social conditioning, programming, and belief? What really is a nation state? What really is a government? What really is banking, besides what CNN and the school system tells me? What do those guys at the top know that I don't know? Ask yourself those kinds of questions, So anyways, I started to understand that the answers to such questions lay outside the box that I was taught to stay in. Society gives you a box and tells you, stay in this box, be a very good performer, or within the box. Do your best to fit the box, to blend in perfectly. The better you are, you fit the box, the more successful that you will be. That's what society tells us, right? But then I started to understand that this is bullshit. The real answers actually were outside of the box, not inside the box. The box that we are taught to stay in doesn't contain the answers that we're looking for. So, like in the movie called The Matrix, I don't know if you've watched that movie, but it's quite a famous movie. I had to know myself, and I also had to know my world afresh. Know thyself, but also know thy world. I realized that limitations were not meant to be obeyed. They were meant to be shattered and transcended. Obstacles are a necessary part of life. They make us stronger by smashing through them. We're not here to be defined by our limitations, our programming, our conditioning, by our social and cultural and government myths that are handed down to us. No. We're not here to be defined by those things, not at all. We are here to grow by recreating ourselves anew, by evolving, by awakening, by smashing through that box. And although I didn't know it at the time, Bitcoin and cryptocurrencies are an aspect of us smashing through that box, redefining ourselves and our world. Are you following me so far? None are more hopelessly enslaved than those who falsely believe that they are free. William Blake said, I must create a system or be enslaved by another man's. I will not reason and compare. My business is to create. Bob Marley said, emancipate yourselves from mental slavery. None but ourselves can free our mind. And Margaret Mead said, never underestimate the ability of a small group of dedicated people to change the world. Indeed, it is the only thing that ever has. And Nelson Mandela said, when a man is denied the right to live the life he believes in, he has no choice but to become an outlaw. At one time, by the way, Mandela was classified as a terrorist before he was obviously, worshipped all around the earth for being actually a liberator and a bringer of peace and justice. So it's quite interesting, right? So that's what I realized, that I needed to understand not just myself, but the system in which I lived in. I needed to question it rather than blindly accept it as truth. I understood finally that I was part of the system and that I could change it. We all can. Is this making sense? Anyways, after realizing this, there was no going back. My eyes had started to open, and like peeling an onion, layers upon layers of misinformation and social conditioning started to fall away. And what I saw was initially so scary that I almost gave up. I realized how the banking system worked, and it shocked me. How could I possibly hope to win against such a huge Goliath as the global banking system, backed by the nation-state concepts and all that they represent? I almost gave up hope. I felt like all was lost and we were all stuck under this system of banking empires forever. And then I heard of Bitcoin and cryptocurrencies. Now, by this time, I was doing financially okay somewhat. And I was somewhat flexible. But like I said, I was still enslaved by the old system of life. Like most people are, just a little less so than most. But still enslaved in a way, right? But this new money revolution called Bitcoin was something else altogether. I saw, I met, and I heard of many, many people becoming liberated in all sorts of ways through it. I mean, some made huge amounts of money very fast. Yes, okay? But that's not all. That's just the beginning. Other people in developing countries, for example, could finally send funds to their loved ones without paying wildly expensive fees to banks and to Western Union. Others who were previously unbanked and facing financial exclusion, not just facing, actually living through the problems that come with financial exclusion, were finally able to have their own bank in the pocket. In other words, Bitcoin enabled them to have banking, something that was denied from them. Do you know how big that is? Anyways, others, like WikiLeaks, for example, were able to get contributions sent to them even after banks and governments had shut them down. Other generous people, kind-hearted people, were able to help victims in need worldwide by sending Bitcoin fast and easy and cheaply, much easier than would have taken to send the same amount of money using the old school banking system and so on. In fact, even entire countries that were being bullied by bigger nations were able to have new hope because of Bitcoin. And that is only just the beginning. This new money revolution has only just started. We cannot even imagine the cool stuff that it will do in the future. Sounds interesting, doesn't it? Bitcoin and cryptocurrencies and the blockchain technology upon which they ride are here to change everything. The way we work, the way we live, the way we govern, the way we are governed, and so on and so much more. Together with the blockchain, they are the invention and innovation that will transform the world in a far greater way than the internet did. And that is why the present centralized powers such as the banks and governments are afraid of Bitcoin and cryptocurrencies and the blockchain. It's not because criminals can use Bitcoin. After all, criminals use dollars and euros too, every single day. No one says ban dollars and euros, Banks and governments are afraid not because of criminals. They're afraid because Bitcoin and cryptocurrencies place true power and freedom in the hands of you and I. They change the way we see ourselves, and then they change the way we see our world. They break all belief patterns and rebuild them with new ones. They liberate and empower the individual. Does this make sense to you? Although Bitcoin is valued at over $7,000 as of today when I'm recording this webinar in early November 2017, you can always buy a fraction of a Bitcoin. You don't have to buy a whole one. You can buy just $10 worth of Bitcoin, for example. The idea being that you need to start having, some money in Bitcoin and cryptocurrencies. Instead of having all your money in fiat currencies like the dollar, the shilling, the euro, or, only in assets that are denominated in fiat currencies such as mutual funds and so on. Because if and when the fiat currency system collapses, and it will, or goes through deflation, and it will, only things like gold and Bitcoin will save you from massive heartache and pain. And you'll see why later when we get into the secrets, the 3 secrets. Today, Bitcoin and cryptocurrencies can be a small thing that you do on the side, a small thing that grows over time, or they can be a major part of your investment portfolio. Or they can be a complete business that you do when, whereby you make your living trading cryptocurrencies and so on. The point is, these Bitcoin and cryptocurrencies, they are currency, just like the US dollar is currency, which means you can do pretty much almost anything with them that you can do with a dollar, but on a brand new scale and a brand new level of opportunity. It opens up the world. So this is not for special people or for nerds or for geeks. This is for everyone. And the reason why it is for everyone is because the world started off with barter trade, then evolved to use gold, cowrie shells, and commodities as currency, then evolved to paper and coin currencies that were backed by gold. And, that was called reserve currency. When a currency is backed by gold, it's called a reserve currency. Then, after a while, bankers made more currency than the gold that was available to back it. And this was called fractional reserve currency. And then they made so much currency that they realized that they just have to stop using this gold standard, using gold to secure currency, because they don't want the masses, people who have cash, paper, to come to the bank and give it to the bank and say, give me back my gold. So in the 1970s, they stopped completely using that gold standard. And so today we have zero backing of gold on the currencies. Instead, the currencies are backed by political power. These new currencies, the currencies that we all use every day, these are called fiat currencies. And they include just about every currency in the world. Every country in the world, just about every country in the world is using fiat currency. Euro, US dollar, Kenyan shilling, whatever, you name it, it's all all of it. It's all fiat. Fiat currency is actually termed by law, it's called legal tender because it is enforced by the government. And by law, it is called legal fiction. This is actually, I'm not making this up, this is in the law books. Legal fiction. In other words, it's just a bunch of numbers on computer records maintained by a central authority. That's all it is. Bitcoin is also a bunch of numbers on computer records, to be honest, right? However, there's a huge difference. Okay, huge difference. It has an infinitely higher grade of trust and viability and security and the ability to store value and so on than fiat currencies because it rests on a technology called the blockchain, which, as you can see, is respected even by the banks themselves. It is the game changer because for the first time in history, we have a way to ensure and enforce financial trust without requiring a central authority. The blockchain is a technology that makes central authority unnecessary for the creation and maintenance of trust and the creation of legitimacy of currency. That is why the Bitcoin works. It works because of the blockchain. Okay? Or, as Chris Dixon said, there have been 3 eras of currency. Number 1, commodity-based. Number 2, politically based. And now, number 3, mathematics-based. And as Bill Gates said, Bitcoin is a technological tour de force. Makes some sense so far, right? And so, you see, there is no going back. This is just the beginning, but it's the new future of economics. You can join in now nice and early, or you can find yourself having to join in later. Are you getting all this? When I first heard of Bitcoin, I thought it was fake money. I thought I'll ignore it and focus on what I had known all my life to be real money. US dollars, euros, Kenya shillings, and so on. I read news articles of people becoming Bitcoin millionaires, and although I too wanted to become wealthier, I simply didn't, I just couldn't get past the mental wall of my old programming and conditioning that said that only real money is government and bank-issued money. That's the only real money in my mind. Had to come from the government or the banks. And so I missed the initial growth phase of Bitcoin. I could literally have made a few $1 million in a very short time, literally, without even trying. But I let that chance slip past me, all because of some bullshit beliefs that I held about what real money was. Bitcoin wasn't issued by a bank, or a government. And so I just didn't trust it. But after 2 years of watching people get seriously rich with Bitcoin and then watching President Obama saying that the 2008 financial crisis was the single most scary part of his presidency, something clicked in my brain. I started to pay serious attention to Bitcoin. My mind started to understand the bigger picture of what was really going on, of what real money is, what money really is, and also what real money is. At first, it was just a foggy realization, very unclear. And then a thought started forming in my mind, a question actually. I wondered, what would happen when the next financial crisis hit? If the last one was so bad that Obama thought it was the scariest moment of his presidency, over and above nuclear threats and terrorism and so on, and since all the authorities were saying that the financial crisis had simply been postponed and not truly healed and fixed, I knew it was inevitable that the global financial markets would sooner rather than later come crashing down, and this time there would be no chance of fixing it with bank bailouts like they'd done last time. And when it crashed again, people would start buying gold, as they always have for thousands of years. I knew that, So every time financial markets crash, for the lack of a better word, have you noticed that people switch from currency to gold? I think most people know that, yeah? When money gets in trouble, it runs to gold. So when that happens, the price of gold shoots up like crazy. You just look at history. Every single time there's a crisis, the price of gold shoots up, And that's when I had that aha moment. I realized that 7 billion people on the planet could not all buy gold because there just simply wasn't enough gold this time around. Maybe in the past when there were very few people on Earth, there was a lot of gold. So you could run to gold, But today, where do you find gold? There just isn't enough. Think about it. How many times do you see gold in a day? Almost never. And even if you did find gold, it would be very difficult to use gold to buy food, to buy, a coffee, to buy a pizza, to buy a beer, and so on. And then I wondered, what makes gold so valuable in times of crisis? And that was when I remembered something about Bitcoin as well, and I finally understood why Bitcoin was real money, more real than even the US dollar or any other government and bank issued currency. Because you see, the thing that makes gold so valuable in terms of crisis is the fact that you cannot manufacture it. No bank or company or government can manufacture gold. Yes, you can dig holes and find more in the ground if you're lucky, but you can't manufacture it. You can always print more money anytime you feel like, but you can't make more gold. And number two, nobody owns gold. Like, no one has a monopoly on gold. Gold is found everywhere. Number three, you can use gold everywhere. You can go from one country to another continent, and they'll all accept gold. You see, these are things that Bitcoin also shares with gold. And so finally, that bullshit social conditioning and programming that I was carrying around in my mind fell off. My mind started to become clear, my eyes started to become open, and I could see the secrets that the banks and governments didn't want us to know. Yeah? Now, would you like to know what I discovered? I will tell you that right now. For now, let's forget about the global financial crisis of 2008 and any future crisis. We shall come back to that when we get to secret number 2. Right now, let's focus only on understanding what money really is. Most people treat money as if it's some kind of elusive, all-powerful god. They don't understand it, they fear it, they chase after it, they even bleed and die for it. You and I shall not make that mistake today. Instead, we will begin to free our minds by breaking down money into its functional aspects. Instead of thinking money, we shall think MOEUOASOV. What does that mean? MOE stands for medium of exchange. Money was invented to solve a problem known as the coincidence of wants. If you sell beer and I sell cows, it's difficult for us to trade directly by exchanging cows for beer. A medium of exchange is an intermediary instrument used to facilitate the trade of goods and services between parties. Now, understand this clearly. Although we are accustomed to having bank currencies as the only MOEs that we use, in reality, many other instruments can be used as MOEs, including gold, as you know, and of course, Bitcoin and cryptocurrencies. Does that make sense? The next function of money is UOA, which stands for unit of account. A UOA is anything that allows us to value transactions, to keep accounts, and to make calculations. Again, this function can be fulfilled by many instruments, not just governments and bank currencies. Bitcoin and cryptocurrencies can do it too. Finally, we have SOV, store of value. A store of value is anything that can be saved, retrieved, and exchanged at a later time. To qualify as an SOV, it has to be predictably useful when it is retrieved. That means it retains purchasing power into the future without losing this value via inflation, forgery, overprinting, quantitative easing, and so on, or without losing it by extinction, such as by rotting, burning, water damage, loss of confidence, and so on. Now, the best example of SOV is gold. Other examples include real estate currencies, silver, art, and so on. To one extent or the other, they're not all the same, right? And as you will soon see, Bitcoin happens to be one of the best SOVs ever created. Are you still following this logic so far? Good. Now, if you can establish the attributes of MOE, UOA, and SOV on any instrument, you have created money. And that is where Bitcoin and cryptocurrencies come in. Let's break this down further. Abundance versus wealth versus money versus currency. We start by comparing money and currency. Most people think that currency is money, and they're wrong. Currency is not money, but money can be currency. Both money and currency are MOEs and UOAs, and all MOEs and UOAs must be portable, durable, divisible, and fungible for them to be, considered as currency or money. Okay. Now, fungible means that the dollar in my pocket is the same as the dollar in your pocket. If the dollar in my pocket had a different value and was treated differently from the dollar in your pocket, shopkeepers and traders would not be able to blindly trust all dollars. And so money and currency must be fungible, in addition to everything else we've said. Now, money and currency are the same in everything we've talked about, but they are different in one aspect, and that is the SOV aspect, the store of value. A store of value cannot be something that loses value. And one thing that makes something hold value is the fact that it cannot be forged or overprinted. For example, you cannot manufacture new gold, you can only find new gold by mining it, right? However, all banks can print new money every day, every second, as they wish. Yeah, thus creating inflation and loss of purchasing power. By the way, that's where inflation comes from. It comes from money being printed more and more and more. That is why a dollar today buys less than it used to before, because there are more dollars today in the economy than there ever was before. And so gold is money, but currency is not money. Gold is money, but currency is not money. Because as long as currency can be printed indefinitely, it is not money, it's simply currency. And that is where Bitcoin comes in. There's only a fixed number of Bitcoins and no one can ever print or make more no matter how hard they try. A hard limit to the number of Bitcoins that will ever be created is built into the cryptographic algorithm that is Bitcoin itself. And that is why Bitcoin is a store of value like gold. Does that make sense? Now, real quick, true wealth is not the same thing as having a large sum of currency or money. Instead, true wealth is your health, your time, your freedom. You can be a billionaire in terms of currency ownership, yet have no health, no time, and no freedom. Okay? So all you have is a lot of paper and some comfort, okay? But you're not really wealthy, So wealth is not the same thing as having lots of money. At least to me, I don't think so. But that makes sense, right? To an extent, right? Now, abundance is an even bigger concept even bigger than wealth, because abundance is infinity. And that is a lot bigger than being a millionaire. The point of all this is that abundance, wealth, money, and currency are very different things. The current monetary, industrial, and banking system works by tricking us into believing that they are one and the same thing. This is one of the ways it works. Now, so you need to see through the lie. They're not the same thing. But wait, there's more. Let's now seek to understand the fundamental structure of all monetary systems. And the first step to understand is that all money and currency must represent two things: a someone and a something. What does that mean? It means that someone must own the monetary system that produces the currency that we use. And that someone can either be the public, meaning the collective population, which may or may not include the government. Or, number two, the person could be, the owner could be private entities such as banks and kings, or even the government if it is ultimately controlled by a ruling elite and not by the public population, And number three, it can also be owned by no one at all, meaning it is decentralized and autonomous. For example, Bitcoin. Bitcoin doesn't have an owner, okay? So that's the someone, okay? Yeah? Now, something. Something means this, that the currency produced by the monetary system that is owned by a someone, this must be backed by something, and that something can be, number one, debt, which means we use things like treasury bills and bonds to facilitate the creation of new money. Number two, it can be backed by an asset. For example, back in the old days when currency was backed by gold. Number three, it can be backed by, it can be productivity based. Now, the best monetary systems that create true wealth and prosperity for all, with equal opportunity for all, with transparency and fairness, and the systems that provide a true store of value for all, these ones tend to be publicly owned or decentralized systems that are based on assets or productivity. Okay. The worst systems, on the other hand, that do the opposite. In other words, they enrich the system owners at the expense of the public. They enslave the public with using debt. They lead to the creation of inflation and the creation of ruling classes versus working classes, and so on. Such systems are invariably privately owned and debt-based. Now, guess which system we are using today in almost all countries of the world? Do you think we're using the best one or the worst ones? We are actually using the worst possible setup. Yeah, we're using privately owned monetary systems that are debt-based. You see, no wonder we have financial crises and pressures, social pressures, and so on. Okay, we're not using the best, we're using the worst possible system. For good reason, because the people who own it benefit from having it that way. It's not because it just evolved that way by chance. It was designed deliberately. Are you starting to understand all this? You see, in a privately owned debt-based monetary system, private banks create most of our currency, literally out of thin air, using debt. By the way, although we will not get into the details of it here, there's a big difference between credit and debt. Credit is useful for expansion, but debt, because of the interest component, can be lethal. Debt and credit are similar in almost all ways, except that debt carries interest and credit doesn't have to. Okay, if it carries interest, you don't have to attach interest to debt. You can have like a interest-free credit if you wanted. Okay, so anyways, here in this chart you see how the US system works. In a nutshell, the government only creates a tiny fraction of the country's money, less than 4%. This gives confidence in the system. However, the rest of the money, or currency rather, is created by the private banks. And the story is the same in almost all countries in the world, as you can see in these charts. The currency created by government is like a drop in the ocean compared to the currency and the debt created by private banks. It is the same thing in almost every country in the world, hence the term banking system. Private bank owners, meaning human beings like you and I, have the monopoly to issue debt-based currency to the rest of us, and using the government, demand that we all use it exclusively. This is the system that is now prevalent worldwide, and this is not a conspiracy theory. As you can see here in this New Scientist article, a scientific computer modeling study by 3 complex system theorists at the Swiss Federal Institute of Technology in Zurich shows that a relatively small group of companies, mainly banks, have disproportionate power over the global economy. This study showed that less than 1% of the companies were able to control 40% of the entire network. That's the ratio, okay? Now, the top 20 companies, by the way, in this little pyramid of ours, includes Barclays Bank, JP Morgan Chase and Company, Goldman Sachs Group, and so on. Now, ask yourself this. How do you think that happened? Do you think it's because the bankers are the hardest working people on the planet? Not at all. Okay? Money doesn't come from work. It comes from monetary systems. This is the hardest thing to understand. Money doesn't come from work. It comes from monetary systems. And it is because this group, or this whatever, owns the system that creates the currencies that the rest of us have to use. That's why they're in that position. It is like owning the water supply or the air supply of the planet. Of course you will be powerful. So the sad but funny thing is that even most politicians and presidents don't actually understand this stuff. They're just puppets and pawns in the game. They play the political game from the grassroots and they rise up and finally they're noticed by, a few of these elite. They're given campaign funds. They win an election. They stay there for 4 years or whatever it is, 1 or 2 terms. Then they leave, Whereas the people that have the real legacy, the ones that stay there for generations and generations, are the banking cartels. They endure on through all sorts of political changes, you see. They own the political system. Are you understanding this? And this brings us to Bitcoin, cryptocurrencies, and why these old powers are afraid of this new money revolution. In the old system, central governments and private banks created trust by enforcing the concept of legal tender, which means coins or banknotes that must, had to be accepted if offered for payment, and we all had to use the same coins and notes. In other words, the term legal tender means that if I have a shop and you come and take something from my shop and you pay me with the legal tender, the coins or the notes of that area or whatever, I have to accept it. I don't have a choice. That's the concept of legal tender, okay? That's what legal tender means. It started a long time ago in the age of monarchies. That is how monarchies started to guarantee these papers and coins. So this system by design is hierarchical. It's like a pyramid with the elites at the top, okay, owning the system and so on and enforcing it. And the public is at the bottom and so on, okay? Or you can look at it this way. The elite is in the center and the public is on the outside, the outer edges. However, under the new money revolution that is Bitcoin and so on, distributed blockchains are the ones that create unbreakable peer-to-peer trust. Trust is enforced by the blockchain not by the banks or the monarchy or the government or central authorities. It is enforced technologically by mathematics, by algorithms that reinforce each other, and by distributing these algorithms across computers all over the planet so that they also check each other. So it's not just the math that is checking, it's the fact that even if you manage to corrupt the math, the other ones in the other different computers all over the planet will notice when the corruption has happened, and they will not allow it. And so no banks and governments and central authorities are required when you start using the blockchain. Okay? The system is flat. It becomes flat. Instead of hierarchical like a pyramid, it becomes flat. It becomes decentralized. It becomes autonomous, not owned by anyone. And it is not debt-based. Therefore, it is not inflationary. It doesn't create inflation. Now, let's consider fiat currencies versus cryptocurrencies. As you can see here in this chart that shows all the properties and functions of money that we saw earlier, cryptocurrencies actually are better than fiat currencies and arguably better than gold, because it's very difficult to buy pizza online with gold, but you can do it with Bitcoin. So that is what I learned in my journey into the money matrix. Okay? I hope that made you start to realize that Bitcoin is real money in many ways, even more real than fiat currencies such as dollars, euros, Kenya shillings, and so on, okay? Because it stores value better, and it is not the subject of manipulations by politicians and bankers, or banksters, and so on. In other words, it's not subject to the kind of schemes that created the financial crisis of 2008, okay? You cannot make it do the kind of crap that bankers are nowadays doing with our currencies, okay? The kind of crap that caused the financial crisis, the kind of crap that's causing inflation and so on, or, things getting more expensive, or, like you are having to work more and more and more for the same amount of money and so on. This thing called Bitcoin cannot be manipulated in that way. Does that make sense? Now, there are more than 1,000 cryptocurrencies out there. Bitcoin is just one of them. The question is, are they all good for you? And the answer is no. Most cryptocurrencies will fail. Most. Remember, this is a new revolution, okay? We haven't really reached that stage where we can say, oh, this is really good and this is not. We can see how many so far are doing really well and they've proven themselves across time, things like Bitcoin, Ethereum, and so on, and we can see which ones look promising, okay? But most of them are not going to be most of them are going to fail, most of them. But the ones that survive will be stunningly successful at replacing the old financial system. So the question is, should you just buy Bitcoin and avoid all the other cryptocurrencies? Again, no. Because although Bitcoin is the gold standard of cryptos right now, these are still early days. It is better to put together a particular kind of portfolio of cryptocurrencies and use certain strategies and game plans to trade so that you grow fast, even as you remain safe. In other words, even as the market evolves and things go up and down and blah, 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 you remain safe and still grow fast. Now, we'll get to that very shortly in this webinar. For now, let's look at secret number 2. What is the real bubble or Ponzi scheme? Is Bitcoin the real bubble or Ponzi scheme, or is the US dollar, fiat currencies? Are they the real bubble and Ponzi scheme? So the secret factors that can cause the value of your income, savings, and investments to come crashing down, what Bitcoin and the US dollar have to do with that, and how you can protect yourself. Now, we just saw how most of the world's money is actually created by private banks, and how it is based on debt. Now look at these graphs carefully. Let me ask you a question. Which is bigger, the green portions of the graph or the red portions? Look carefully, okay? It is the red portion, right? The debt. Do you know that it's impossible for all that debt to ever be repaid? Why is that so? It is because debt has interest, compound interest charged on it. When your banker gives you a loan for $1,000, that banker asks you to pay back the original $1,000 plus an interest of, let's say, for example, 15%. Now listen very carefully. Every single banker does the same thing. They give you X amount of money and they ask you for X plus interest. right? Now, we all know that only the bank has the ability to manufacture money, right? So when they give you X dollars, which they manufactured out of thin air, and they want you to pay back more than what they gave you, where do they expect that extra to come from? I mean, every single banker manufactures only the principal amount. In other words, the amount of money you ask for as a loan, that's all they're gonna manufacture. They give it to you, right? But no banker manufactures the interest that they ask for. They only ask for it. They don't actually manufacture it. They expect you to go find it somehow from all the other principal amounts that the other banks have issued. Okay? When you analyze the whole system, you realize that the whole system is making only the principal, asking for interest, but they're not making the interest. They're not actually manufacturing. They ask for it. Every single bank on the planet creates the principal and not the interest. So this means that no one is actually creating the interest. And so when you add up all the currencies ever made, it will always be less than the debt plus interest because the interest is not created. The bank gives you $1,000 and tells you that every year they will charge you a fictional 15% additional interest, which is mathematical. It's just a mathematical calculation. Okay, it simply adds up on paper, it adds up on the computer, but no one is actually manufacturing this additional thing that the mathematical interest formula is adding. You understand? And that's the secret, my friend. All debt-based systems are designed to crash eventually. That is their design. First, they create inflation and loss of purchasing power as the debt rises and more currency is pumped into the system. As you can see here, the purchasing power declines, causing inflation as the debt rises. Meanwhile, true stores of value, such as gold and Bitcoin, actually rise in value. Okay? And then, when this Ponzi scheme of debt and money out of thin air, currency out of thin air, when it reaches a certain critical point, when there's way too much debt compared to how much currency there is, the crash happens. Every single time. It has happened so many times on this planet, hundreds and hundreds of times, okay? Yeah? So the global financial crisis that we saw in 2008 was an almost crash. It almost crashed, right? But there have been many other little crashes that have happened in all sorts of countries, everywhere, all over the world. Every country in the world has experienced, at some point in their past, a currency crash. Okay, all of them, and there are no exceptions. The 2008 global financial crisis was not repaired. It wasn't fixed. It was only saved temporarily by massively creating new currency in a process known as quantitative easing. But that was just a band-aid on a wound that has since grown. The crash will happen. It's not if, it's when. And by the way, it has happened again, I just want to remind you again, hundreds and hundreds of times in all nations all over the world over the last many hundreds of years. Global reserve currencies, or rather, let's say global reserve fiat currencies, such as the US dollar, take longer to crash, okay, than national or regional fiat currencies. But all fiat currencies crash, no exceptions. The debt simply becomes too large, and thus the value of the currency becomes worthless. Since people lose trust in the currency once the debt cannot be repaid. Yeah. To give you an idea of how large the debt is, look at this graph from the Money Project. Okay, this is the size of the US national debt compared to the total global national debt. It is larger than the 500 biggest companies in America combined. It is bigger than the financial assets of most of the world put together. It is 25 times bigger than all global oil exports per year. It is 155 times bigger than all gold mined per year, and it is way bigger than the world's cash, gold, silver, and Bitcoin combined. It simply cannot be repaid. This cannot go on forever. The crash is inevitable. And because most other global currencies are either pegged to or valued against the US dollar in one way or another, and because most currencies also have more debt than can be repaid, although it's not as bad as the US debt, but it's still bad, it's still big. All countries, right? No exceptions, almost no exceptions. There's a few that are way better than the others, but almost all of them are just in the same boat, right? So the crash will happen. It will be systemic and it will be global. I'm not making this up. Have you heard this before? I mean, it's been all over the news, okay? Now, every single time this happens, crashes occur, and value always transfers from fiat currency to gold. Always. Makes sense, right? Except this time, as we said before, the world has 7 billion people, which it didn't used to have before, which means that there simply isn't enough gold for everyone. And secondly, we have this new technology called the blockchain and its currencies, such as Bitcoin, which means that Bitcoin is the new gold. In fact, one Bitcoin is now worth more than gold per ounce. Makes sense, doesn't it? Another way to look at it is with this chart, also by the Money Project. This chart is so huge that it's difficult to navigate, but we will try, right? This is the value of the world's silver represented by that small brick. And here is the value of cryptocurrencies, which, by the way, is the fastest growing asset class in the whole world, by far. Okay? Cryptocurrencies are the fastest growing asset class on this planet by far. Now, and then, moving on in the graph, this is the biggest companies, the richest people, and then all the currencies in the world, all the gold in the world stock markets, and then the global money supply, the global debt, the global real estate, then global derivatives. Now, I want you to notice a couple of things. First, that the size of the global debt is much, much bigger than the size of printed and minted currencies, which is what you see here in green color. The black boxes are currencies that exist only as digital records and not coins and notes. Next, notice the immense size of the derivatives market. Look, see how big this is compared to everything else. Derivatives, by the way, are what created the 2008 financial crisis. Derivatives are like really fake money, a Ponzi scheme. Like, that's a real Ponzi scheme, okay? Now, banks make them up. They just make them up. And there's no asset or value in them except systemic leverage. Derivatives are the true risk to the economy, not Bitcoin. They are fictional and simply enrich the banks at the expense of the public. Okay, most people have never even heard of derivatives because you and I never use them, right? Yet they are so huge that they dwarf other assets. Think about that. Think about the fact that there's trillions, quadrillions of dollars or currency out there on the planet, but less than 1% is used for goods and services. Are you understanding this? Okay. Derivatives are so dangerous that they crashed the global financial system in 2008, or rather almost crashed it completely. Look at the size of them. That's shocking, isn't it? And so, while some argue that Bitcoin is a bubble or Ponzi scheme, others argue that fiat currency and derivatives is the real bubble and Ponzi scheme. Are you getting all this? And so this partly explains why Bitcoin is seen as a safe haven in which to store value. And why it's also rising in value, and why it has a potential to reach tens of thousands of dollars per Bitcoin, or maybe even hundreds of thousands of dollars per Bitcoin, or maybe even millions of dollars or more per Bitcoin, because when the financial system finally crashes next time, much of that value that you see here currently stored in fiat currencies, in derivatives and blah, 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 it will shift to gold, silver, and Bitcoin. Like the way you take water from one cup and transfer it, pour it into another cup. Think about it that way. Value will move from fiat currencies and derivatives or fiat currency, whatever, and it will shift, okay, from that cup into the cup that is called gold, silver, Bitcoin, okay? Because it's a safer cup. Makes sense, right? But here's the thing to remember. You cannot use gold to buy food and pay rent. You can use it to store value, but not to buy a pizza. So Bitcoin is very likely to soak up much more value than even gold can. Yeah? And this is what we're calling the biggest transfer of wealth in history. Does that make sense?